Well, welcome to Business Talk here on Business Tech. And they say diversification is the only free lunch in investing. Every time I hear the word, though, I can't help but think of Ron Burgundy at Anchorman saying, "I'm impressed. That's how much I love diversity. It's like an old wooden ship." Of course, in finance, diversification isn't about naval nostalgia. It's about survival. And I think if the last few years have taught South Africans anything, it's that keeping all your money tied to one market, one currency, or one political system is like betting your life savings on the outcome of a VAR review. And joining me today to unpack why a globally diversified portfolio is so smart and essential is Hildegard Wilson, who's the MD of Glacier International. Hildegard, welcome. You've been in the role for a couple of months now, so great to have you on the show. Let's just kick off with the big picture. I mean, we've had a great year on the JSE, thanks largely to the precious metals counters. But in a world where anyone can own a piece of Apple or Amazon or Nestle from their phone, why should South Africans be thinking about taking a portion of their savings offshore?
Thank you. Thank you for having me. I think you've hit it on the head. It's about diversification. So if you think about a typical South African investor, their house is in South Africa, their retirement fund is in South Africa, and probably their biggest asset, their income or their business, is in South Africa as well. So it's all linked to the rand, and as you mentioned, it's linked to a specific political landscape and monetary policy. So if you invest offshore, and what I'm talking about investing offshore is taking that rand and buying a dollar or buying a euro and physically externalizing that money, you get exposure to another currency. And with that, you're diversifying your portfolio. And like you said, it's probably our only free lunch that we can get hold of when it comes to making more money.
And I want to, because we hear the word diversification thrown around like protein shakes, but I really want to understand what it means in the practical weeds of it. So you've mentioned currency exposure. For the average South African saver, what does it mean? Does it mean just getting into a different geography? Does it mean getting into different sectors? Is it only about currencies? How do you define offshore diversification? Because it can be a very broad bucket.
Yes, absolutely, absolutely. So let's make it practical. So in South Africa, if you invest in a South African fund, some of it might be offshore. It's still linked to the rand, but we've got about the 2,000 funds in the South African market. If you look globally, we've got about 300,000 funds available. So just think about the magnitude and the opportunity set that's available offshore. So what we mean with diversification, we know the whole Trump story and the tech that's run quite heavily. So if you don't like the tech story and you think that the US market is overvalued, when you look at the offshore opportunity set, you can diversify in funds that excludes the US. That opportunity is very limited in South Africa. So offshore, there's a lot of funds available that will give you that very specific exposure. If you think about you want only emerging market exposure, it's becoming emerging markets. I'm very happy to say is coming back in flavor. But if you want that emerging market flavor, you can have that. If you like emerging markets, excluding China, you can have that. So the opportunity set that we're talking about here, physically offshore, is just a lot more. But also, I want to mention again, it's that diversification of the currency as well. So you're not just linked to the rand, you're linked to a different currency, a different jurisdiction, and the landscape.
Yeah, it's so important, that diversification story just gives you something that's a little uncorrelated. And when some parts of the market go up, others go down and vice versa. And it just kind of builds stability. I still think, though, that there's this lingering perception that offshore is only for the wealthy. The type who say summering in Europe instead of holiday. How true is that today? I mean, how accessible have these offshore platforms become for regular South Africans?
Look, in the past, I agree. It was really exclusive to the super rich and the wealthy, but with technological advancements and really competitive pressure, the industry had to evolve. And with that, it has really become far more accessible to the regular South African to invest offshore. Not only that, it's also easier. The processes, a lot of the processes are online now. It's intuitive. It makes sense. So it's available to, I want to say, the man on the street. So
Yeah.
the other development that I've also seen in the market is that the minimums have come down. Obviously, if the minimums are high, it makes it inaccessible for the everyday man. But our minimums in the industry have come down quite a lot. So if I can just use Glacier as an example, in our offshore investment plan, we've got a 5,000 Rand per month investment minimum. We're continuously looking at bringing that down even further, but I think 5,000 Rand is really becoming, it's quite affordable for most people.
Yeah, I mean, listen, when you say 5,000 Rand a month, that really does, it should open up to the broad retail market. I mean, I just think of those gambling numbers that came out recently, and to think how much money we're spending on gambling when you could be investing that, growing your wealth offshore. And the regulators have realized this as well. I mean, we've got, what is it, Regulation 28 of the Pension Funds Act kind of limits your asset allocation. And we saw recently that was up to 45% offshore. I mean, that's huge. Why do you think investors should be taking advantage of that limit? And is there a rule of thumb? Should you be going all the way to 45%? How do you approach taking advantage of that increased allocation that we get through regulation?
Yes, absolutely. So I want to touch on the point that you just made. The stats that just came out says about 50% of our disposable income we spend on gambling, which is just a
Crazy.
absolutely crazy amount. And we know the house always wins. But if you invest offshore, there's no house that can win. It is about the mechanics and the generation of investments and income. So to come back to the 45%, yes. So it started off way back. I'm giving away my age, but to 10 to 15 to 25 or 20 plus 5, and now it's sitting at 45% for almost the last 3 years. And it is also the regulator that understand that, diversification is key. And it is a suitcase word that we use for everything, but I don't want to go into too much of the mathematics, but it is that if you've got two assets that perform differently overall, if you combine those two, your outcome will be better. So it's literally a mathematical sum and formula that proves that. But with the 45%, if we look at I always call it the smart money, because I do believe our asset management industry is very clever. They invest around 30 to 35% on average offshore. So they're not pushing to that 45% limit. There's a lot of asset managers that do push the 45% limit because they believe that's in line with the investment philosophy. But the thing that we have to think about in Regulation 28 is that what are we matching on the other side? We're matching a local liability, because eventually I want an income in South Africa to pay for my local expenses.
Yes.
So it's not so that's also why we can't go all out and invest, 45, even higher than 45 into offshore assets. So the other problem also with that 45%, and why I think it's not enough, is that, again, it's just in rands. Every fund that you invest in your local retirement fund is in rands. So to get that true offshore diversification, you need to look outside of your retirement fund and invest those assets offshore.
I think that's a very good point that you raised there. And I mean, there is some natural diversification that we're getting in rands anyway through investing on the JSE. Richemont predominantly gets its earnings offshore and outside of South Africa, and so many other examples of that. I think for many investors, when you look at how you go offshore, this is also where it becomes a bit difficult. And I think the difference here, say, between a feeder fund and a direct offshore investment, still about as clear as mud. So walk us through how they differ and when one makes more sense than the other when we talk about feeder funds versus going directly offshore.
Absolutely. So I've spoken about those 2,000 funds that's available in South Africa, and some of those invest in what we call feeder funds. So it is a fund, it's a unit trust that's got 100% invest in an offshore fund. So you'll have potentially a Dodging Cox fund, and they invest 1-to-1 into that fund. So that's a feeder fund. The problem again with the feeder fund, and it's a great mechanism to easily invest and get that offshore exposure. The first thing is that it's limited. So you have to get FSCA approval for every feeder fund that you launch. And that's quite time consuming. So the number of funds available in the South African market is quite limited. The second thing is that all your CGT will be based in rands. So we know over the long term the rand depreciates. So the tax that you end up paying on a feeder fund with the rand depreciating will be more than if you had invested directly offshore. So you pay on that rand depreciation as well. So a feeder fund is a rand denominated international fund, whereas that fund will also be available offshore that you can buy with the international currency, be that dollars or euros or whatever you would like to.
Right. And that's when you would then be externalizing those rands and converting them into those hard currencies and then acquiring those assets. So really going truly offshore. When you look at the opportunity set, I mean, one thing I like about offshore investing, your point around the number of funds here versus globally, 2,000, 300,000, I mean, it shows you less than 1% of the investment universe. And there are all of these interesting sectors that we just don't have. Biotech, for example. I mean, I love biotech. What sectors or trends are most exciting right now? The ones that South Africans can't really tap into through local markets on the JSE?
I think the one, and I'm going to sound a bit cliche, but I think the one still very exciting is tech. So not only biotech, but tech in itself. So if you look at the AI trend, and I'm sure everybody's now fed up of hearing about AI, but it is still a trend that is going to be here for quite a number of years. If you look at the JSE, we don't really have exposure to AI in its pure form like a NVIDIA. So we can invest in Naspers, and yes, they've got 10 cents, and yes, there is a bit of gaming, online gaming tech in there, but it's not really that 1-to-1 puristic exposure of tech. So for me, I think as a South African, we're missing out on that tech run at the moment, yeah.
Amazon Web Services went down recently, and then we all realized how important these big tech companies are. And I know everyone talks about concentration of the Mag 7, but they are just so central to everything we do nowadays. And you only notice when you can't access those services, and many of those you can only invest in offshore. Do you think of, the chip manufacturers, Taiwan Semiconductor, all of those, and they're great opportunities. When it comes to timing this, though, and everyone has an idea, the briars, to, this is when you should take your money offshore. And everyone's got a friend who says, I'll take money offshore when the rand strengthens, and then they don't. I mean, how do you coach clients through those psychological biases that we have? And what's your advice on how to do it and when to make the move offshore? Because the rand has been quite strong lately.
Absolutely. Yeah. The currency and the timing of the rand is probably one of the things that we trying to debunk the most. That's a question I get the most. When do I have to take my rand offshore? And look, yes, at just over 17 to the dollar, it's come back quite nicely. And still people are asking me, no, when is the rand going to break through the 17 mark? And that question, I wish I had that glass ball, because then we would all be millionaires, because I would share my insights with you. But unfortunately, the rand is one of the most volatile currencies. We've all heard this, but one of the most volatile currencies in the world. And it's because they use us as a proxy for emerging markets. So it gets traded a lot. So to predict when that 17 will be broken, so before I invest, is such a difficult thing. And by the time you invest, you've already missed out on the great returns that you could have had offshore. So I would rather say, let's not time the rand, and rather get in with a benefit that I know that I can time, and that's the diversification benefit.
Yeah.
Also, when it comes to your personal circumstances, I don't like blanket advice. Everybody's unique. So my advice would always be, go and ask your financial advisor when or how to externalize your money that makes sense to you.
Yeah, because everyone's estate is different. And the one thing is, we know as our assets grow, that kind of planning becomes a whole lot more complicated. So best to seek proper advice on that. And that's certainly where I do see the big value in financial advice growing as well. Finally, Hildegard, I mean, the world's become a lot more connected nowadays. Everyone can do their own research and get onto a chat GPT and use it as a financial advisor for you, but just double check everything, because I've seen it hallucinate. But I think it's a lot more unpredictable as well. So what do you see as the next frontier for South Africans building globally diversified portfolios? And where do you see Glacier fitting into that future? But what kind of innovation or new thinking are you bringing to the table?
For me, it is accessibility and access not only to, I want to call it traditional assets, but also to alternative assets.
Yeah.
So it is becoming more and more difficult to find those returns on the stock market, whether it's local or offshore. And the next frontier, I believe, is going to be in alternative assets and to get, again, the diversification into those assets. It is also to make it easier to invest offshore. So we're always thinking about making it even easier, making the process more robust. So for us, it is important to just to create the awareness of it, but also to make it, once you've decided to take that plunge and to invest offshore, that it is as seamless and as easy as possible.
Well, I love that you mentioned alternatives. I was at an AGM for a private equity fund recently, and what really struck me was, while we worry about quartitis, as they call it in the US, quarterly earnings, we have it, half yearly in South Africa. You look at patient capital like private equity, and they can invest for a 5 to 7 year period. They're not under those immediate pressures. And some of the returns that were shared, because they can think more long-term and strategically, were very compelling. And again, it just gives you that greater diversification. So I'll definitely be on board if you bring an alternative product to market, maybe infrastructure or impact fund as well. But that's where we're going to have to leave it. A reminder that going offshore isn't just about leaving South Africa behind. It's about building a global life, financially speaking, without borders. And that's really the world that we're living in today. A huge thanks to Hildegard Wilson, MD at Glacier International, for joining me and unpacking how smart diversification is giving South Africans more freedom and more future. I'm Michael Avery, and this has been Business Talk on Business Tech.